For a look at what's ahead for big tech stocks, we're joined now by D.A. Davidson and Company Managing Director and Senior Research Analyst Tom Forte. Tom, thank you for being here on this day. Now, can you give us just kind of a big picture sense of what's going on with big tech right now? What's going on in terms of sentiment and really just the shrugging off of any type of risk or negative news that seems to be, affecting this sector?
Sure. So when I look at it on a company-by-company basis, I think for Google, investors are warming up to the fact that Google owns the most valuable video asset, being YouTube. When you think about the advertising revenue they could generate on YouTube and their relatively favorable margins versus Netflix on the cost of scripted content, I think that's what's driving Google, in addition to the fact that they're lapping easy compares when you think about the pressure on digital advertising at the start of the pandemic. And for Apple, I think it's the advantage of a multi-year upgrade cycle for their most important product being the iPhone. I do think, though, that investors are shrugging off the antitrust regulatory risk for both, which I do think is meaningful and something we're following closely.
Now, Tom, it seems like investors are also shrugging off this idea that it's allowing some apps to kind of bypass their App Store fee. This news out this morning that allow some of the apps, including Netflix, to provide links to their websites for user payments, which allows them to kind of get around that 30% App Store fee that's become a little bit more controversial. Investors don't seem to be reacting to that, though, this morning. Why not?
I agree with you that investors are not looking and reacting to that. And that's a good question on why. My thesis is that over time, that 30% commission that Apple collects from the App Store could decline to a lower number, such as 10%. I think maybe the hope from some investors is that if Apple can make this adjustments on its own, it won't require the government to step in and maybe come up with a more onerous solution for Apple. But I do think it's curious that investors are giving the stock a pass on that important development.
Tom, real quick, just to come back to valuation of both these names, where are we? I mean, they're both coming off of incredible quarters, top line and bottom line growth, but where are we on multiples?
Yep, so Apple's still trading at a premium multiple to where it has historically, given that it was able to achieve a higher multiple on the higher margin non-hardware revenue. And then Google, I think, is more reasonably on a valuation basis versus historical, because, again, it's benefiting from the rebound in digital advertising.
All right. Tom Forte, thank you for joining us.
Shepard Smith here. Thanks for watching CNBC on YouTube.